Before we get started talking about stocks and economic news today, I wanted to bring up this saying so it's top of mind while we have the discussion and learn what we're going to learn today. Everything is connected. And what that idea refers to is how everything in the universe directly or indirectly has an impact on everything else. So, what we're going to talk about today all impacts stocks and how they move, and it's way deeper than just looking at these charts because there's way different things that impact it, like this kind of stuff right here. What is going on with Iran and Israel for the fourth day in a row with all of the conflict they've been having, exchanging missile blows as these countries just continue to just box it out. It just keeps going. And people have died. They reported that the death toll for people in Israel has up to 224 civilians being killed. And in Israel, they say that their death toll's risen up to 24 people. So it's not like a little firework show behind the stand. There's actually people's lives being lost right now. And then look at this part. A second U.S. carrier strike group is heading to the Middle East, and the U.S. is sending more ships to help Israel defend against Iranian missiles. All while Trump is on Truth Social. Here's his recent pin post. Iran should have signed the deal I told them to sign. What a shame and a waste of a human life. Simply stated, Iran cannot have a nuclear weapon. I said it over and over again. Everyone should immediately evacuate. And this is all going on while the G7 was taking place, and the G7 is a summit that took place this week in Canada. And the G7 summit is where leaders get together, world leaders, and have discussions on their discussions, right? What they want to discuss. And this one was centered mainly around tariffs directly with Donald Trump. So what their idea was is kind of what I got from it is that, hey, we're gonna get this man in person. We're gonna sweet talk him, try to charm the guy, get him smiling and laughing, and try to get more favorable terms for our countries. That real belly to belly handshake kind of deal thing. And it didn't seem to really work. There were officials reporting that agreements weren't necessarily reached, and that if they aren't, as all of this continues, they're probably going to have to meet again after this G7 event ends, this summit ends later on this week to kind of get it going. And that's because Trump left early. He left a day early, all to focus on this Middle East tension going on. And I'd say that really does two things for him. That kind of increases his negotiation power because he didn't fold for one. Whether or not that plays into his deal or not, his art of the deal. But two, it also shows that he wants to make this headline right here go away. He wants all of this stuff to go away, according to his Truth Social posts, anyways. And he wants a deal to be reached between these two countries, the conflict to end, and that is where the optimism came into the stock market today. So we've seen stocks end of the day positive, although they're kind of selling off into close. Gold kind of selling off today, and the VIX. I mean, the VIX is still pretty flat, selling off to back to lower volatility. We're back under 20. We did see Bitcoin go up today, and we seen the dollar go up today. Also, after hours, I thought this was interesting. WTI, which is America's indicator for oil. I forget the actual word that is used, but benchmark. This is up 5.31% after hours. But I mean, it's so small. I wonder what Brent's doing. Or was it crude? Huh. Can't find it. D&D maybe? I can't find it. I could have swore it was Brent though. Oh yeah, right there. B&O. Oh wow, this one's down 3% after hours. And down 1.76 on the day. So I'd imagine all of these moves are in hopes that there's this optimism that that goes away and that all the news articles were correct that, hey, we need to buy the dip because history shows that geopolitical risks are almost always nothing burgers. And about a month or two later, like stocks are going to be higher than where they were before it started. So that's kind of where we're at on that. People are just still buying the dip. Hey, these news articles say it's worth it. I got this 401k and stuff. I'm going to be buying them anyways and then buying my individual stocks. I'm going to just keep doing it. Like, that's what history shows. And what we got this week are a lot of events that could drive the market one way or another. And there's a few things that would be great if we got. If we got trade deals from the G Summit, like, it doesn't seem likely that all of these deals are just going to get like signed last minute and everything's good. It seems like that officials were reporting that it didn't really end in any deals being made. Trump said we're almost there with Canada, but they'd say that's like 30 days out. So it would be good if we got trade deals from the G7 and then some good economic data like US retail sales and the home builder confidence and business inventories and housing starts, building permits, initial jobless claims. We've got a FOMC rate decision. What is Powell going to say? He got his conference coming up on um, Wednesday, and the market's going to be watching what this man's commentary on all the ongoing issues is going to be if he gives just a subtle sign of what's going to happen. And we usually know he's pretty boring and he really sticks and tries to stay on topic and reiterate that the Fed's focus and the Fed's job is this and none of that other stuff is within their control. So you know what? Since we don't control that and we don't know what's going to happen, let's just wait and see, everybody. And that's not what everybody wants to hear. They definitely don't want to hear that. They want a rate cut. And that definitely doesn't seem like it's going to be likely. We want this Middle East resolution to happen, which, I mean, we could get a trade deal tomorrow. I actually went backwards on the website, but it doesn't seem likely, right? So there's a lot of things that we want that just don't seem likely. So what are the odds that investors get everything they want, but wait, before this Friday, or really before this Thursday, because the market closes a little early because of Juneteenth. So what are the odds that everybody's just happy with how everything goes? And remember, you can never make everybody happy. But I'd imagine that this volatility is just like everything else, just like tariffs and just like interest rates and just like all of this other stuff. It's going to just be higher for longer, including volatility. So I'd imagine that's going to be a little bit longer. And then there's some articles discussing how a lot of smart people are kind of hedging these markets at these levels with the VIX below 20, with stocks headed near all-time highs, with just everything going on, right? And with everything being connected or whatnot. But some people are just deciding to take some chips off of the table. Oh my gosh, this Bitcoin chart right here looks crazy. Let's spin a little bit. All these lines. So some people's hedging the market, kind of taking some chips off. Some are getting out of margin. Some, and we'll talk about margin here in a little bit. Some are cutting back on buying. Some are all cash right now. But, there's people making different position ideas, but these people who are willing to underperform the market, assuming it keeps going up, like they're okay missing out on any gains as all of this continues and it seems like the market just goes up no matter what. They do say that timing the market is impossible and that time in the market beats timing the market, because if we get on the all-time chart on this stock chart or on this gold chart, or probably not the dollar chart, but if you've invested into a solid asset over time, like over time you've done pretty well. So who cares if it's went up and down in the short term? Over the long term, investments show to kind of do that. And like, I'm not a financial advisor. I can't give financial advice. I can't make any recommendations or anything. But, and there's no way to predict that trend's going to continue with everything. But as long as things just happen like they have, history like proves itself, and that's why people invest. But there are things that come up, and then that comes up to the most dangerous saying in investing, that this time is different. And it's easy to say that, like, we got this war going on, we got tariffs, we got high interest rates, we got to worry about the Fed and a slowing consumer and a crazy president. There's all these other things, so this time could be different. But is it? We don't really know that part. So we're just going to keep on watching that. There has been reportings that in the US, households are maintaining higher than average levels of margin. And let's talk about what margin is real quick. So what margin refers to is borrowing money from your brokerage to buy securities, or pretty much think about it like this. You got like this investment app like Robinhood or Webull, and you could support me down using my link. Just go visit me on there. Hold on, where'd it go? Here, let's type it real quick. joelshakur.com/visit. You visit there, you can check out all my deals and stuff. But all right, so back to margin. It's like a loan from Robinhood. So they give you a loan on like their app, and then you could buy stocks with it. It's great because when stocks go up, you made money. You pretty much made interest on somebody else's money, and then you could give them back and kind of profit the spread, right? And it all sounds pretty good. And that's kind of how it works. But there are risks because like it's a loan, right? And you got to pay it back eventually. But households have record high amounts of margin right now, while stocks are at all-time highs. A possible trade war could happen. Interest rates are still high. A real war is going on right now. Like, that could get worse. And the US sending carrier ships over there, like, all they're doing is defending right now. But I mean, what if an American got killed or something in the military? Or even like a innocent bystander or something. Like, there's already people dying. So that's just another risk, and that impacts oil costs, which is inflationary, and we'll talk about inflation in a bit. Slower spending from the consumer. We're going to talk about retail sales here in a bit, which impacts company earnings. Going back to, do stocks deserve a new all-time high when their earnings aren't meeting expectations or growing sustainably? And then the national deficit, which is inflationary itself and can increase borrowing costs. So is that sustainable? And this is where the risk comes in with margin, is because losses can be magnified due to leverage, because now you didn't just lose your money, you lost somebody else's money that you have to pay back. And what happens is when these stocks drop like a certain amount, depending on the stock, it could be a 10% drop or a 5% drop or a 50% drop. Whenever that occurs, there's this automatic sell that is triggered to cover the margin. So they pretty much sell your stocks, take their money back, and boom, a loss just occurred. And US households are holding higher than average amounts of margin than they have, despite all of these risks we just talked about. Goldman said that US households have made 20 billion in net purchases of individual stocks over the last 3 months, since about mid-March, right during Liberation Day. And they also note that retail investors own about 38% of US individual stocks. And they keep buying even now. And that's this Tina trade that's going on. There's no alternative. So what else are you going to buy other than US assets? And I mean, you're pretty fair when you look at the all-time chart on these things, like pretty much straight up. Where we at? Yeah, pretty much straight up. You could see this very well. Look at that. Pretty much straight up. So why even buy anything else? And that goes into the Tina trade. And then it's so easy to do too, like it's automated. It's fun to buy on Robinhood and Webull, and then it's automated through 401ks and pension plans and insurance companies and all these other funds that are buying stocks and keeping the demand for them up. But is this time different though? There are good there are good things to look at though. Like jobs are holding up pretty well. So it's not like just a complete crap show out of there. And as long as there's jobs and there's tons of ways to make money, like even if you lost your job, there's Uber, Postmates, DoorDash. You could go get a job at the factory at Amazon, assuming there's one by you, or just some type of factory job or something. And people do make more on average versus what they have in past years. So it's not like it's just a complete doom show out there, but there are risks that we need to be aware of. So a big one that we got coming up tomorrow is US retail sales, and this is coming in for the month of May, and a lot of economists are expecting this one to kind of come in soft, uh, down from the 0.1% rise we got in April. In May, we're expecting to go from positive 0.1% to negative 0.6%. So quite the drop. And what they're assuming is that spending slowed due to everybody front running tariffs. They bought a ton and then it decreased the need of them to drive up sales the month after the front running had happened. And they're expecting, so this says 0.6%. Wall Street, the Wall Street Journal survey, no, I think it was FactSet. Anyways, some economists believe that the decline will be a little bit larger than this at 0.7% in total sales. However, I was thinking about the fact that CPI and PPI, these inflationary data sets that come in to measure inflation, those kind of came in a little soft versus our expectation of tariffs increasing those ones and impacting them. So maybe if tariffs didn't necessarily impact CPI, consumer inflation, or PPI, wholesale inflation, maybe it might not have much of an effect, at least yet, on US retail sales, but to be determined. We'll see what happens with that one. So that's pretty much what we got today. We're going to be watching US retail sales tomorrow. Pretty busy day as far as, this war updates and then data sets coming out. Wednesday's the really big day though, because we got housing starts, building permits. So housing starts are houses starting to be built. Like they actually are starting the project. Building permits, they're building houses, but this isn't right now. Like it takes a while to get permits. So it's like, hey, I'm thinking of building a home in 6 months or in a year or something. And we need to start getting the plans. So permits are more plans. Housing starts are projects started. The initial jobless claims, that one's super important. How's the job market holding up? Are people filing for unemployment? The FOMC interest rate decision. In the press conference, what I'm thinking is going to happen is that they hold rates steady. They're going to solidify their wait and see, and they're going to try to be boring. They don't want to talk about any of this other stuff, and it's right before the market closes for Juneteenth on Thursday. And then Friday, we got Philadelphia Fed manufacturing survey. How's manufacturing holding up? Then US leading economic indicators. All of this, though, like, I hate to say it, but right now, all of this is noise. What everybody's really waiting on are these trade deals and what's going to happen with this war. Because is World War III going to happen? Like, like that's what's on people's minds. Like it could get worse. And is it going to get worse from either this physical war going on, this financial war going on through tariffs and trade, and then if these two could like combine somehow? You see that? Oh, you can't see it. On my Windows laptop, I just grouped the pages together, this one and this one, and try to make them one. But it just goes back to what we were talking about earlier. Everything is connected. Even if it's not just the main topic we want to talk about, there's all these other factors that influence it. And we're learning that. Margin, war, trade, consumers and how they feel about the economy, spending, risk, where things could go wrong, reportings. It just keeps going. But I'm down to keep learning with y'all every day. Just come back and hang out to me. We can learn together. I'll see y'all later.